So now that we've touched briefly on the difference between cryptocurrencies and crypto tokens, I think it's time to take a look around the crypto market and look at the different types of coins, the different types of assets and investments in this space so you can understand the landscape. So it's important to understand that 2008 was the creation of Bitcoin. Bitcoin was the first major blockchain technology that hit the market. And ever since then, there's been a lot of competitors that have tried to do the same thing in their own way. The most important thing to understand before we go through this chapter is the difference between Bitcoin and the rest of these projects is that Bitcoin doesn't have a company. Bitcoin is not a company that's a for-profit agency trying to make decisions to maximize profits. The other projects that came out as competitors to Bitcoin are trying to make a different kind of Bitcoin. Bitcoin has its limitations and it has its flaws on purpose. It's slow on purpose. It's hard to do too many transactions at once on purpose. And some people tend to disagree whether that's the best way to go about having this technology. So over the years, there's been a lot of competitors that have tried to come up and compete with Bitcoin by creating a similar technology that's either faster, allows more transactions, allows larger transactions, allows you to do different things on top of the platform. But that doesn't change the fact that they're all for-profit companies that are issuing technology so they can make money. And Bitcoin is an anonymous technology that runs on a distributed, decentralized ledger. So it's Bitcoin against everything else. So now that we've cleared up the difference between Bitcoin and the rest of the space, let's talk about the rest of the space. So let's talk about altcoins. The term altcoins is outdated, so we're going to call them alternative digital assets. But since this is how the space grew and this is the language that the people who built the space understand, it's important for you guys to stay on top of it as well. So altcoins are short for alternatives to Bitcoin. These are cryptocurrencies that use technology called blockchain to secure peer-to-peer transactions. Altcoins build on the success of Bitcoin by slightly changing the rules to appeal to different users. So altcoins are just trying to do things to make improvements to Bitcoin, depending on who's using it and what they're using it for. So the first famous altcoin that came out, 2011, Charlie Lee was a computer scientist that worked at Google back in 2011. He ended up leaving Google to start a company called Litecoin. And Litecoin issued a currency called LTC, which was aiming to be a faster and more efficient version of Bitcoin. You can see today, Litecoin's market cap is big, but the usage is dwindling. Litecoin isn't having as much success, even though they've been around for a while. In 2012, OpenCoin, which is now called Ripple Labs, took over the XRP project that was being ran by 3 data scientists before. This token was supposed to be for transactions. It was supposed to be a new way to use the blockchain to do more interesting things. And then 2012 is when that project came out, still around till today. 2014, Stellar Lumens. So the Stellar Foundation launches the XLM token on top of the Stellar Lumens, and it aimed to be a frictionless payment between different cryptocurrencies. So before, if you had Bitcoins, you either had to sell Bitcoins for dollars and then use the dollars to buy Ethereums. Stellar kind of changed that and allowed you to use XLM to do transactions between different platforms. So you can trade your XLM for Bitcoin, you can trade your Ethereum for XLM, and it made it easier to transact between different networks. In 2015, Vitalik Buterin, which was a programmer, but also somebody who used to write about Bitcoin, part of Bitcoin Magazine, launched his own currency called Ethereum. Today, it's the most used blockchain network out of all of the other currencies. So that's a brief history of the coins that came after Bitcoin. They all tried to do different things. Litecoin was trying to be a faster Bitcoin. Ripple was supposed to be Bitcoin that allowed you to do bigger transactions. Stellar was Bitcoin that allowed you to go between different currencies. Ethereum was Bitcoin that you can build different applications on top of. So they are all using the success of that blockchain technology in order to create different use cases based on who their users were. So in the alternative digital asset space, which is what we're going to call everything that's not Bitcoin, okay? They're alternative digital assets. And what alternative means is they're alternatives to Bitcoin. The 4 biggest spaces in crypto are obviously cryptocurrencies are number 1. Then it's altcoins, which are alternative to Bitcoins, which includes some cryptocurrencies and some other assets. There's decentralized finance tokens, and then there's non-fungible tokens. We're going to talk about these in more detail to explain where this space is really going and what it looks like today. Decentralized finance, or DeFi for short, is a blockchain-based form of finance that doesn't rely on a central financial intermediary like a broker, exchange, or a bank to offer financial services. So DeFi uses something called smart contracts that run on blockchains, and the most common blockchain that it's built on is Ethereum. So let's break that down. Decentralized is a blockchain-based form of finance. So this is not the current system that relies on a third party where I have to give a third party access to my money, ownership over my money, just to be able to do transactions. So right now, if you want to use the current digital system, you have to give a bank ownership of your money, and then they'll issue you a card that you can use to transact using your own money. In the decentralized system, you can have access to your funds in an account that belongs to you. And instead of having a third party own that account, it's a decentralized or distributed system that's not owned by any central authority. It's a network of computers around the world. That's a digital system like the internet. And you can use a website on the internet that doesn't have to be owned by a specific company. So decentralized finance has some benefits, some downsides, but the benefits are it eliminates central points of authority. Why is that important? In finance, a central point of authority is the difference between a country having democracy and authoritarianism. If a company, government, or organization can have all access to your money and can have all access to decision making, they can shut off your access to your bank account. They can turn off your access to your income. They can lock your money. They can stop you from moving money around. They can stop you from taking money out. And that gets very dangerous because then everything you've worked hard for is lost. So this eliminates the risk of a central authority having control over your money because you have ownership over your funds. It eliminates unnecessary intermediaries. Sometimes the person in the middle isn't trying to steal your money. They're just trying to make more money from you. They're trying to charge you for something that they don't really need to be doing. So decentralized finance is going to cut out a lot of the middlemen that just tend to take fees for doing work that doesn't really need to be there. And decentralized finance democratizes access to financial services. That means that more people in more places that don't currently have access to financial services are going to have access in the future, which is a huge deal. So I've said this before, I don't want you guys to be technologists, but I do want you guys to understand the technology side of it enough that if anybody ever brings it up, you have a good enough idea so you can hold your own. Ethereum is the most common network that blockchain developers use to build decentralized finance technology. So if there's something that we're using to build on top of, we're going to call that the base layer, layer 0, or the settlement layer. So Ethereum is the settlement layer. It is the main network. Developers build things on top of the settlement layer that have different applications. There's the protocol layer, the application layer, and the aggregate layer. We're not going to go into too much detail about what these do, but the most important part of this is to understand that Ethereum is that base layer, that layer 0, that everything else is built on top of, and all the decentralized finance tokens and the NFTs and some of the other technologies are built on top of that settlement layer. Now, the total size of the decentralized finance market has grown incredibly over the past 4 years. The total market cap of the cryptocurrency market is $1.7 trillion. About 100 billion of that is decentralized finance alone. So we've listed some of the most popular projects here in terms of market cap. We have Uniswap, Chainlink, DAI, and AV. These are the largest decentralized finance token that have been built, and they're really coming in hot because the space is so new. It's incredible to see the market cap that it has and the size of the market. That's an indication that there's a lot of interest in this space. And because people think it's going to disrupt the traditional finance space, this could be a pretty hot area going into the next 3 to 5 years that really starts to expand and bring in a lot of money and interest. Last but not least, there are non-fungible tokens. Non-fungible tokens are built on top of the settlement layer. They're usually here in the aggregate or the application layer. Non-fungible tokens, NFTs for short, are unique cryptographic tokens. So they're unique that exist on a blockchain and cannot be replicated. NFTs can be used to represent real-world items like artwork, and they're non-fungible. So let's break that down. What does non-fungible mean? The word fungible means the ability to replace or be replaced by another identical item. So for example, a dollar bill is fungible. If I give you $1 and you give me $1, it doesn't matter if it's not the same dollar, they both have the same value. So because dollars are fungible, As long as I can exchange it for something of equal value, my $100 is the exact same as your $100, even if we exchange them. Gold is also fungible. My 10 ounces of gold are worth the same as your 10 ounces of gold. And so if we exchange them, we both still have the same value. Non-fungible means that you can't replace it with something else that's similar. There's a unique aspect to this ownership that says that there's only one of these and you own it. So art is the easiest way to understand a non-fungible asset. Something like the Mona Lisa is non-fungible because just because I draw another version of the Mona Lisa, and I can't draw, so that's probably not a good example, it doesn't mean that I can sell mine for the same price as the real Mona Lisa. The original Mona Lisa by Da Vinci is non-fungible. There's only one and it can't be replicated. I can't put a copy Mona Lisa and have it be worth the same as the real Mona Lisa. There can only be one. And so a non-fungible token is not like a Bitcoin, where if I give you a Bitcoin and you give me a Bitcoin, it's still the same value. Non-fungible tokens are unique and specific to that individual token. If you own token A, nobody else can own token A. So the beauty about non-fungible tokens is that they're decentralized. So there is no central issuer. You can go on one of these websites and mint your own token. And now you can own that specific piece of internet property, such as a picture, a file, a meme, a GIF, or a funny video. Non-fungible, meaning it cannot be replicated. And immutable means it's unable to be changed. Nobody can come in there and change your artwork and mess with it and say, haha, you don't own this thing anymore. Once you own it and once your account is tied to this ownership, you are the legal owner of that token. So the total sales of NFT as of May 21st, 2021 is around $1 billion. That means almost $1 billion worth of digital art has been sold using these kinds of tokens. The most famous non-fungible token being sold is the artist Beeple. His Everyday's painting sold for $69 million on March 11th, 2021. It is the most expensive non-fungible token to be sold to date. And so if you guys can imagine what $70 million art is, that's competing with some of the most famous art paintings in the world. So a space that's this new is already competing with some of the most famous art that's ever existed for the past 500 or 1,000 years. It begs the question how important this space is going to be in the future at storing wealth and being a viable marketplace. We discussed the different aspects of the alternative digital asset space. We talked about the fact that alternative assets are basically anything that's not Bitcoin. And those are altcoins, alternative asset coins to Bitcoin. We talked about the decentralized finance tokens, and we talked about the emerging sector of non-fungible tokens. So these are areas worth looking into, guys. Over the next 5, 10, 15 years, this space is going to be growing in a way that we've never imagined. In the decentralized finance space, we could be looking at disruption of the current banking system. So maybe banks have less of a presence in the future. Maybe financial intermediaries, maybe applications that allow us to send money instantly are going to have lower fees to compete with these blockchain solutions. So we're going to see faster data transfers, more money being able to get transferred in smaller and more organized ways, and the future is bright. So make sure that you guys are keeping your eye on these spaces and that you're staying on top of these technologies as they come up so you can get involved and get invested.